It's the time where investors can see how companies fared in the fourth quarter of last year.
So, Kelly, earnings season is all about data.
I like data. So my favorite time is earnings season.
Research analyst Kelly Green says this year will be key in evaluating a company's true prospects.
I know people are tired of hearing about the pandemic effect, but we saw stocks hit the bottom and then we saw them go straight up. Now we're at the point where 2022 is going to have to look better than 2021, but most companies saw incredible results in 2021 compared to 2020. This is going to be the year where we see if companies are actually continue to grow or if it was just a growth in relation to the bottom we saw in 2020. Especially for tech companies, we can get so excited about the tech and we can see all of the future potential versus is the company making money?
Now's the time to cross-reference announcements like mergers, management changes, or products companies made.
Any prudent investor is going to follow the press releases for a company that they're invested in. So when we get the full quarter data, you can see how individual events affected the books overall.
In recent months, there's been a rotation out of tech stocks and into value stocks. Soon, you might see sectors sort of merge.
Ford's an interesting company because it's an automotive company, sure, but now it's trying to become a tech company. My brother and his wife have their smartphones set, so whatever time they have to leave for work, the car starts. Their Ford cars start 15 minutes before they have to get in the car and leave for work.
You can use the Ford Pass app to remote start your vehicle's engine and climate control system.
So Ford's not just looking at, can we make an electric vehicle, but how can your vehicle be connected with the rest of your life? So I think there will also be opportunities where you're not going to have to choose between value and tech.
And dominance will be up for grabs.
Is Ford going to be an EV leader or maybe Lucid? Lucid shares are up. Ford is a long-term player and Lucid is a short-term growth player. So there's room in your portfolio for both.
Ford announced in October it would reinstate its regular quarterly dividends after suspending them as a cost-saving measure in March of 2020. It's now distributing 10 cents a share.
You're a big fan of dividends. How should investors view dividends in this climate?
My specialty and my heart is with dividend stocks, and it always has been. I love dividend stocks because if you can pay a dividend, you have extra money. Generally, if you have the extra money to pay to your shareholders, you're in a good position. Walmart, Waste Management, Clorox, those things have continued to pay dividends for over 100 years. And they will probably pay dividends for another 100 years.
In Weiss Ratings Daily, Kelly writes about using the Weiss Ratings stock screener and its filters to see which stocks are climbing and which stocks might be sliding.
If my long-term holds start to slide down in the ratings, then I start to dig deeper into the numbers. I don't want my dividend payers, they slide down into a B range. Okay, but oh no, now we're hitting B minus. Maybe this isn't the safest place for my money anymore.
The site's Watchlist function is also your friend. You'll get email alerts if there's any change with the stock you're following. Kelly has Nokia on her watch list. A recent alert told her that shares had been up 0.5% for the past 60 days. Nokia is a volatile but interesting stock. It may have lots of competition in the cell phone world, but it shouldn't be overlooked.
It's a company that's on my radar because they work the infrastructure. So towers, small cells, we needed to move from 3G to 4G and then 4G, 5G. Our researchers are already working on 6G and 7G. It's interesting because they create components that are going to be needed if we complete this expansion. My favorite part of Nokia is that in 2020, they were selected by NASA to put the first network on the moon.
How can investors tell whether it's a good buying opportunity if a stock has dipped or whether they should just leave it alone?
If it just dips into the sell range occasionally, then maybe that's a buying opportunity. Or if it just dips into the hold range. When we look at individual stocks, it's about the patterns. And when you look at the ratings history, there's also a little sentence that tells you why it dropped. The more data you have, the more that data means something.
So use all the tools here to make sense of that data and invest accordingly.
Research analyst Kelly Green, great speaking with you.
Thanks, Jessica. It's always a pleasure.